Anchor's strategy and asset allocation for the third quarter of 2017 outlines our high-level views of financial markets and explains our asset allocation going into the third quarter of the year. The outlook for the South African economy and South African shares has deteriorated over recent months, and we believe the expectations for the earnings of South African businesses are likely to come down from previous estimates. Given this backdrop, we have reduced our allocation to domestic equities from an overweight position to neutral. In recent months, the Rand and the SA bond market have been resilient, thanks largely to global forces and in spite of domestic events. The global search for yield and flows into emerging markets have continued supporting our currency and bonds. We expect flows to emerging markets to persist, and this would continue to benefit South African bond yields. We are therefore more positive on SA bonds now than we were a few months ago, and have upgraded our local bonds from underweight to neutral. Political shocks aside, the flows into SA bonds should also support the currency somewhat. We expect the Rand to be in the region of 14 Rand to the dollar in 12 months' time, which is lower than our previous forecast of 14.75. Globally, the Trump trade has lost its shine, and markets seem to have little confidence in President Trump's ability to implement his reform agenda, but this does leave room for upside surprise in this regard, as expectations are low. We believe that markets are being driven by the continued trend of good GDP growth and improving GDP growth. The simultaneous strength of both equity and bond markets suggests that liquidity provided by central banks, largely in the form of quantitative easing, is propping up asset prices, but this has been most acutely felt in the valuations of global bonds, which we feel are overvalued. We believe global equities will continue to outperform bonds should quantitative easing begin to be reduced, largely due to the improvements in the earnings outlook. In light of the recent run in global equities, we have reduced our 12-month expected return from 11% to 7% in US dollars. We believe this will remain comfortably above the return offered by global bonds and are thus overweight global equities and underweight global bonds. Our full analysis of asset classes and their expected returns is available in our third quarter strategy and asset allocation document, which you can find on our website. For more information, or if you'd like to invest with Anchor, please contact us at sales@anchorcapital.co.za.